to our third cybersecurity panel as part of our State of Cybersecurity annual kind of event. Thank you so much, everybody, for joining here again. Really appreciate it. I know we're doing a little bit of a marathon on January 3rd, kind of first day back. I won't bring out my Happy New Year stuff or put any sparklers on this time, but I'm so happy to have everybody here. Oh my gosh, Fatima, Sterling, oh my God, Rob. You don't know how good it makes me feel to interview you three versus you interview me. So Happy New Year to you all, and thank you for joining. This session, as part of everything we've been doing, we're trying to create a 360-degree view on cyber. We heard from the system integrator community. We've heard from the CISOs. We polled literally hundreds of people here to come up with trends, but I was really looking forward to hearing from, I think the three of you have about 100 years of covering the software universe. So, Fatima, I didn't mean to age you there with that, but I know I'll just.
Fatima, welcome to the club of being old.
Yeah.
I would say it's mostly concentrated with Robbie and Sterling, but I'll take a couple of gray hairs when I can.
There you go. Rob Owens, maybe start with you. Tell everybody what your role is for a minute and what you've been doing. And I know a lot of great work with Piper. Just introduce yourself, if you would.
Yeah, sure. Thanks, Dave, and thanks for having me. So I co-head our technology research here at Piper. I've been a research analyst since 1994. I started my career at a firm called Pacific Crest and was there for a good 25 plus years, and over 3 years now at Piper. And I've been covering security since 1997, Dave, when I first started covering Symantec and McAfee. So going back a little ways, and happy to be here and still enjoying the space very much.
I used to love going to your Pac Crest events in Colorado. Was it Vail or Beaver Creek or somewhere?
It was Vail, yes.
Yeah.
Fantastic.
I think I still have Pac Crest sweatshirts and t-shirts.
We had some very good swag. So it was fun back in the day. And now Piper has a conference in Nashville. So we'll have to get you down there.
Thank you for joining. Great to see you, my friend, and looking good. Where are you calling in from today?
Portland, Oregon, of course.
Worse, Portland. I knew that. I was looking for rain behind you, but I didn't see it.
It's the one day this time of year that the sun's actually out. So I'm showing it a little bit out the window.
Fatima, Boolani, will you introduce yourself as well? I know from Citi. Thank you for joining us as well.
Absolutely. Fatima Boolani. I jointly head up the U.S. software equity research effort here at Citi and Citi's investment bank. And I've been covering enterprise software for the last 14 years, the vast majority of that spending time in the cybersecurity realm and then swimming out from there. And yeah, I've been around the block on the street here, Citi now, UBS prior, but it's been a fun ride, and I'm reporting live from New York City. So we're covering the coasts here as we move along.
From New York. I used to always worry on my analyst calls when your question popped up. I was like, uh-oh, here it comes. I gotta prepare.
Yeah, I was gonna say, interviewing you is a very charitable term to use, more like the third degree when you're on the other side of the table. So
kind of you. The 20-minute answer. So yeah, there you go. Auty, introduce yourself if you would, my friend.
Yeah, so similar to Rob, I've been covering cybersecurity since April of 1997. Symantec McAfee brought a firewall company called Trusted Information Systems public, one of the first of the cyber companies on the network side. I spent 25 years at JP Morgan, wonderful years, wonderful organization, but in 2022, I moved over to Silicon Valley Bank. So it's Silicon Valley Bank, Moffett Nathanson, where I am the head of global software research, and happy to be building out the practice over here. And thanks for having me, Dave.
Sterling, awesome to see you, my friend. You always have a guitar or something behind you, or a rock song that I get to listen to when you put me on hold on your phone. Thank you. Where are you calling in from?
Northern Jersey. So I stayed out of the office. I somehow ended up with Rob's rain today. So thanks, Rob.
Yeah, exactly. Okay, well, let's get started. I would love for you, with all the years of experience the three of you have, can you summarize 2022? Because it was an interesting year. When you sort of look, I summarized the beginning, record investments, 19 plus billion through Q3. So the private capital coming into the cyber world is unbelievable still. And yeah, there was contraction in valuations in the private side, but we didn't see it till late. The public side saw a lot of contraction. I'm not sure exactly what the hack was down, 27, 28%, somewhere there, maybe one of you know. But Rob, maybe start with you. How did you see 2022 for a minute from your vantage point, covering a lot of the things?
Yeah, so I mean, the year started as the golden age of cyber, and unfortunately, we're measured every quarter and every year, and so I think that the theme will play out. But we had this big discussion around resiliency versus immunity, Dave. And as we look at fundamentals of companies, actually, we saw average revenue expectations for growth go up across our universe and go up pretty much consistent with what the last 5 years have been, aside from 2021, which was a banner year for everybody. But I think these names didn't prove immune. And especially as we got into the second half of the year and we started talking about sales cycles extensions, weakness in SMB, weakness internationally, we had FX in our face. And security from a stock perspective was seen as a safe place to hide. So unfortunately, these stocks drifted down pretty materially. I think the average company that I covered, including a couple of the infrastructure loose security companies, were down about 41%. That doesn't include some of the M&A that we did see in the space, which would prop it up to about minus 33% overall, but definitely in line with the NASDAQ and kind of a disappointing year, especially given where we were at going into this year.
Yeah, I can't agree more. In fact, I was calling it the golden age of cyber myself. I think at last year's annual event here, because 2021 and 2020 were just like the biggest years I've ever seen. And then we sort of got this. Fatima, what was your comments? I'd love to hear your view as well.
Yeah, I'd love to build on, some of the points Rob mentioned just around the resiliency versus immunity of cybersecurity and cybersecurity budgetary spend. I think just from an investor psychology perspective, effectively what we saw, which, certainly contributed to some of the stats that Rob mentioned around stock performance, is this divergence between expectations and reality ultimately, right? So you sort of have this setup where how is it possible that cyber budgets could see retrenchment or more judiciousness or more prudence relative to the past and certainly relative to other areas of your IT pockets, because cyber is sacrosanct, right? And so certainly I think there was a divergence of expectations versus reality, and I think we've seen this, and I'm certain Sterling and Rob will agree with me on this. There's always been sort of a psychology around cyber spending having an episodic nature as well. And Dave, I think you can absolutely attest to this in your time spent at FireEye. It's, certainly a perspective that a very wide negative geopolitical event like the Russia-Ukraine conflict would be a catalyst for spend, would catalyze incremental spend, right? So I think that those are sort of more milestone factors that contributed to this mismatch. But I think in aggregate, just to put some more meat around what Rob was saying, just sort of this clutching of the pearls of how is it possible that cyber budgets can slow down? And the reality is, when you're a CPG company and your margins are already razor thin, and the supply chain and cost inflation has turning upside down on your financial model, everything's going to get looked at and put under the microscope.
Yeah, can't agree more. Sterling, give your summary as well before we drill in.
Yeah, from my standpoint, when we were sitting in December of 21, we felt like we were more than 2 standard deviations to the right in terms of expectations of valuation. So we actually went out there and made a very big, bold, negative call coming into 22. We downgraded everything. We were the only, sell rating on a number of really popular names out there, including some in cybersecurity. And the reason why we did that is there was just this massive disconnect between kind of the fundamentals of what was happening. And, it felt pretty clear that we were about to go into a rising interest rate environment, which was a massive disconnect in terms of valuations. Now you fast forward to today, we feel the exact opposite. We feel like we're going to the point where we're not quite 2 standard deviations, but we're definitely way off the deep end to the other end of the spectrum. So we're a lot more constructive heading into 23 than we were, coming into 22, even though, as Rob and Fatima were kind of pointing to, yeah, the fundamentals may not be quite as good in terms of the growth, because you're not immune, but on a relative basis, software as an industry is going to be one of the best growing segments of the entire economy, and cybersecurity within that is going to be one of the best growing segments within software. So I'm incredibly encouraged. And that doesn't mean that January 3rd, 4th, 5th is where we're going to see this massive rise in stock prices and valuation and the rest of it. It's going to take a little bit of time, but I think as the year unfolds, we're really encouraged about what we're going to say.
Yeah, I want to drill in a little bit because I like what you're all saying here because, during my time, 20 years of this space, I had my years at McAfee where my whole strategy was kind of best of suite. You probably heard me talk about this. Whenever I watched a new category pop up, I tried to buy the second or third company in that category, bundle it all into a suite, then economically disadvantage all my competition, and I could grow, land, and expand, and off we go. That kind of play is happening right now with some of the bigger players as well. I'd be curious from your perspective. And then I hit my FireEye days, Fatima, where it was best of breed. It was like, wow, the episodic threat landscape allowed FireEye to go from almost 0 to $1 billion in revenue in 3-4 years because the Chinese threat was so aggressive that I was able to build a company in that way. Where are we in your perspective as we go into 2023? The CISOs and SIs talked about simplification, less vendors. Is this the year where the suite vendors win even more and the best of breed get starved out? What's your vantage point?
Yeah, I'll take the jump ball on that. I think we are, it's sort of happened so slowly and then it's happening so quickly, right? I think a suite-based or a vendor consolidation approach in the cybersecurity realm historically was anathema. But I think what we are seeing now, because of the complexity that remote work, cloud adoption, distributed IT, because of the complexity and the unforced errors coming from that type of an IT architecture are bringing into the organization, I think what we're hearing from a lot of CISOs and CIOs is, hey, I sure as heck don't want 100 vendors in my environment. I can't possibly get that down to 5 because, I still want insurance and I still want to, CYA. I really want to make sure I have my bases covered, but I can sure as heck bring that down to 25, 30, illustrative numbers, right? So the idea here is, I think, a much, much greater, more tangible appetite to consolidate vendors, both from a technology efficacy standpoint, but look, also from a procurement efficacy standpoint, right? And I can think of a number of large companies who are doing a pretty fantastic job of that. So, I think the data points and the evidentiary support on that is building, certainly for us. And that's a sea change from certainly when I started out in the business, where it was best of breed or bust. And now it's just, we simply can't. I mean, I don't have to tell you about the employment stats in cybersecurity. I think the unemployment rate is 0. Good luck finding a CISO. Good luck finding folks to staff up your SOC, right? So I think a lot of those factors, it's sort of the confluence of those factors coming together that's finally making it a maybe more of a business decision that, we can't have 50, 60 vendors just sprawled out from a vendor standpoint in the environment.
Rob, over to you. What's your perspective? Best of breed, best of suite. How do you see the winners in 2023?
Yeah, I really think we've been seeing this play out throughout 2022, and intra-domain consolidation was very natural in security. You had the networking guys trying to build the God box, and we had the UTMs and the next gen firewall. It's inter-domain that we're starting to see now. And I fully believe that less complexity is important, but you're still going to have some best of breed vendors out there. And as Fatima said, I think the average organization of scale touts about 75 security vendors, and that number needs to come down. 5 is unrealistic, 40, 50, 60 is not. And there's tremendous cost savings. And as long as the efficaciousness of the solutions themselves are good. And in a lot of ways, security is becoming more and more about the data play and the left hand knowing what the right hand is doing. That if someone can build out a comprehensive suite, I think it really resonates with customers. And back to some sort of pane of glass, not a single pane of glass, but how are we going to look at our existing infrastructure, whether that's network, whether that's endpoint? How do we think about extension to cloud, the whole shift left? I think the more consolidation that we can see that's driving better results and better economic results for customers themselves, it's going to play out in meaningful fashion. So we actually think consolidation will be a big theme as we look at 2023.
You win the prize for the first 6-syllable word, efficaciousness. Wow, I was really impressed. I read that one down. Sterling, over to you.
Rob crushed his SATs. Ask him.
Sterling?
I'm just sitting here just looking up what all these words mean. Like I'm lost. No, I think just to add a little bit more to it, I'm going to take the opposite side and do the best of breed. The best of breed will exist where the new areas are evolving. And right now that's cloud security. So there's a perception out there from the customers that they need best of breed in terms of their cloud security. And I tell you what, heading into 23, the thing that's changed the most in terms of the work that we've done is for the last, feels like 5 years, identity was the #1 priority in security. It doesn't look like that's going to be the case in 23. It looks like it's going to be cloud security. And that's a massive change. And I think you'll see best of breed is going to reign supreme there for several more years. It's the other areas where you can get away with what's believed to be good enough, especially in light of, as Fatima was mentioning, Rob was mentioning the procurement, the pricing. I'm sure we'll touch upon it, but Microsoft E5 licensing has had a dramatic impact on the space. And I think this is just the beginning.
Yeah, I can't agree more with you. Fatima, tell me, and maybe the others, what does the ideal cyber company look like in 2023? And the reason I'm going to ask you that is, for a guy who's run these and I watch all these companies, I look for a couple of things, right? One is government spending kind of accelerated. So if there is a vertical that's, call it 15, 20%, those who have really been able to penetrate those areas, I put them in a positive checkbox. I look at some other areas of the market where they're able to expand, internationally, and how well have they been able to expand there? You look at the conflicts around the world. Can they take advantage of some trends? Do they have a managed service, Overwatchy like service that could be kind of that kind of thing that you could sell? One man's view on some of that, where I look at that, but then you have this FX headwind that's hitting so many of them as well. And what does it look like? What winner and how much growth versus profitability? What's your ideal company look like? And ones that could go public, what do they need to look like too?
Yeah, I'm looking for 3 ingredients for companies to really succeed in the realm of cyber, right? So let's take aside the fact that, hey, cyber is still thematically going to be extremely important. I think nation state attack volumes are only going to move up into the right. And so, with those sort of factors as accepted, I think the 3 ingredients of a successful company are going to be companies that genuinely have platforms, right? So to your point, the best of suite approach, and, not sort of half-baked in the other realms outside of the company's core solution areas, right? So their core competence, having a veritable, very competitive, viable alternative solution in adjacent markets, I think it's going to be very important, because then that subsequently ties into companies' abilities to sell in the marketplace, right? So if we're talking about generally more budget constraints, and, I think we've established that, again, cyber is going to sort of be in a camp of its own, and you're really going to have to, be sensible about where you're going to optimize in cyber. Well, if you've got companies with a platform, best of suite approach, they're going to be much better at sort of the sales efficiency angle and a procurement angle from that, right? And I think the third area is certainly companies being able to do that efficiently. Again, it's all sort of interrelated, right? If you've got a suite of solutions, 3 large portfolios of solutions under your umbrella, you can offer a 1 + 1 = 3 approach to efficacy, right? So where you can add, automation elements and AI elements to alleviate some of the headcount burden. So I think those are kind of the 3 ingredients that I'd be looking for to see, which cybersecurity companies are going to thrive in what is probably going to be a more sober economic environment. And I think even companies on the other side of the table are going to be looking for very financially healthy companies to want to do business with, right? I think one of the things that we've been hearing from our contacts in the Valley and the private ecosystem is, you've got this terrific private company with a whiz bang product, but are they going to be around in 3 years, right? Am I going to, bet 3 years of an invoicing or contractual duration with this company that, may or may not be able to service me in 3 years? And besides, my likelihood and my appetite to do longer term deals is probably lower now because I can stick a bunch of my cash on my balance sheet in treasuries, right? And so I think we think about a lot of those factors, and some of this is corroborated by our conversations. Is financially healthy and solvent companies that are going to get the first look.
Thank you. Good comments. Rob, over to you. Just 2 minutes left, if you would. Give us a little summary of what it looks like. Yeah.
So I think, security is software, is tech, and people still want growth. Growth without paying for it on the other side. So ideally 25, 30% growth, and I'd suggest 30. There are names of scale in the space that are growing. Having a model that makes sense to moving forward, moving to positive free cash flow, and eventually showing something that I think Sterling probably agree, rule of 50 would make sense. It's in terms of standout. In critical scale such that you can get into the distribution channel, you can get into the federal government, seeing something of reasonable size so you can start to enjoy that leverage in the business model. And of course, having something that's a recurring model, better touching your customer more often on an annual basis, better wallet share monetization. So for me, it's growth, but growth that comes with profitability, having a recurring model and having that critical scale so we can see and enjoy that next phase of growth and leverage in the model.
And I think, I think for a lot of the people that are probably watching, don't try to chase the profile that's going to be the first one that goes public in 2023. That's going to take some, exceptional both scale, growth, and probably even profitability. But that's not what investors are going to want for every deal that follows up. Dave and Rob and I, we've been through how many cycles, right? It all starts the same way. Do what's best for the long term of the business. I agree with Rob. It's definitely got to be growth. And the three things I look for is technology, total addressable market, and the team. Within that construct of those three things, I think you will find all the key attributes.
Maybe I stole that from you. I can't remember. I call it the 3 T's: team, tech, and TAM. Or you stole it from me, Sterling.
I think it went back and forth. I was going to say that. I was going to give you some, but I think it came from one of the discussions that you and I had. That's for sure.
I can't agree more, right? Leadership matters, right? The technology and the TAM matter. That efficiency matters, and I like that the rule of 50 and growth matters too. Rob, Sterling, Fatima, thank you so much. Great to see you. Happy New Year to all of you. It was so fun being a sell-side analyst for a day. So I appreciate that. And good seeing you all. Thank you for coming on the show.
Thanks
Cheers.
for having us, Dave.
Thank you.
Thank you.
We're going to take a 1-minute break again, and then we'll come back with a venture capital view, kind of an opposite view of where we were before. So 1 minute, we'll be right back with 3 amazing experts.